Hi, I'm Conrad Miller, and I want to welcome you to the Bankruptcy Center of Kansas City. This video is concerning one of the chapters of bankruptcy. There's 3 chapters in the bankruptcy that are used most, Chapter 7, Chapter 13, and Chapter 11. This video concerns what we call Chapter 7 bankruptcy. And the Chapter 7 is what used to be called, maybe you've heard of it, it's called straight bankruptcy. It's a liquidation process. And basically what happens is, in your life you have certain assets. Let's say you have your house here. Okay, you have a house, you've got a car, maybe you have a 401k, a retirement plan. You have you just say you have some sort of a, you would say you filed your tax and you got a tax refund. Okay, you got a bank account, maybe a small savings account. Okay, all those things. Maybe you've got an old collection of cards or something, coins or something, that has. These are your assets. And basically what happens when you file a Chapter 7 is we create an estate for you. There's an estate created and there's a trustee appointed. And it's the duty of the trustee to collect all your non-exempt assets, and that's the key, your non-exempt assets, and distribute them to your creditors. So your creditors are over here, and he's going to collect those assets and distribute it to them. Well, both Kansas and Missouri have certain exemptions, which you cannot get and which your creditors cannot get. And those exemptions will vary, but let's just say generally, and again, all circumstances are different, but generally, let's say your house is not included in that estate, your car is not included in your estate. If you owe money on those, you can keep those assets. You can, if you, quote, reaffirm those assets, which means you're going to agree to keep making the house payments, and they're going to continue to honor that. You're going to keep that house. If you have car payments, you're going to continue to make the car payments. You're going to keep the car. We'll talk more about reaffirmation agreements, but generally you can keep those if you want. Your 401k, you get to keep those. Any kind of retirement plans, generally you're going to be able to keep those retirement plans. Tax refund. Tax refunds are not exempt, so those are going to go to your trustee. Trustee's going to collect those. Same with bank accounts and any kind of collections or other non-exempt assets that you might have. And when we sit down, we'll talk about what are exempt, what are not exempt, and what's going to go into the trustees, into your estate, your bankruptcy estate. So let's say you had a $1,500 refund. So that goes in here, $1,500. You have a bank account of $300 at the date of filing. That's the date of filing, what you have at the date of filing. And you have a $200 collection of coins. So you've got a total estate of $2,000. The trustee is going to collect that, and then he is going to distribute those to your creditors. Your creditors have to file a claim for the amount, and it doesn't make any difference how much they have. They're going to get a percentage of whatever that $2,000 is. So let's say creditor A has 50% of the claims, he's going to get $1,000. Creditor B, he has 25%, he's going to get $500, and C has 25% of the total claims, he's going to get $500. Now that is all they get. That is what the straight bankruptcy does. They're going to pay them, they take that, and that's in full satisfaction of everything you would owe them. Okay, that's a Chapter 7. They take full satisfaction of that, and they cannot pursue you ever again for any of those debts. Any filing debts that you may have. Okay, so we'll talk about all that. Generally, and just on a general generality, if you don't have any of these things, if you don't have a tax refund that's coming due, if your bank account's under, a small bank account, or sometimes even if you have a small collection, the trustee may not want to deal with that. If he does that, then he files what's called a report of no assets, and then you're discharged. And once everything's done, you're discharged. The process takes probably 4 to 6 months. And we'll talk more again, once you come in, we'll talk more about how this all works, what your assets are, your debts, whether we think that you're going to have assets that can be distributed. But that's Chapter 7. Again, straight bankruptcy. If you want to come in, set up a consultation, feel free to do that. We do give free 30-minute consultations, so just give us a call, or just email us on the contact information on the website, and we'll get you set up, and we can come in and we can talk about your situation. So I look forward to talking to you soon. Thanks.